Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hello, everybody. Welcome back. You know, we've just recently been talking about our 3 philosophies that we teach in TRADEway to give you the potential to be a great trader, such as the 3-leg table, getting the math on your side, leveraging the big boys. And we went back into the 3-leg table, and last time we kind of breaking it down in more detail. So the 3 legs are this: fundamental analysis, technical analysis, and market tone. And you need all 3 of those in the play, working, saying go before you push the trade button, I think. I mean, that's our philosophy. And if you do a trade without all 3 legs on the table, you don't have the math on your side. You've got to play the probability math like the big boys. That's what gets the math on your side, is having all 3 of those saying yes, go. So last time we talked about fundamental analysis. You can go back and check previous episodes for these things if you want to go take a look. But here's the topic today: technical analysis. Now, if you were on last time, you know that I told you the fundamental analysis is really, really important, but it's really, really boring. And the good news is we do it for you. If you become an insider with TRADEway, then all of a sudden we're going to give you baskets of stocks that are the right kind of stocks. They're called growth stocks. You don't want value stocks. You want growth stocks. And they're going to be listed in a less than $30 group or basket, and then a greater than $30 per share basket. So you're going to have stock lists and all kinds of things like that when you become an insider with TRADEway. Now, remember, you can always go out to TRADEway.com and sign up for the Insider Plus program. You're going to get all these things I've already mentioned: fundamental analysis, technical analysis help, market tone information about whether the 3rd leg on the table is moving in the right direction for your play, market alerts, industry rankings. It's like an ongoing educational program. It's got coaching help. It's just so super. So even if you've never traded before, go out to TRADEway.com, sign up for the Insider Plus program, and you can get started now. Now, really, you know, one of the greatest time-saving benefits in this whole program is the help with fundamental analysis. You don't have to do all the math. You don't have to run all the ratios. And we're going to have this basket of stocks prepared for you with around 100 of the best growth stocks in the world that have good leadership, that have great products, that have earnings per share growing quarter to quarter like you need to see. So let us do that work for you. You'll have this whole basket of stocks as an insider. And what are we going to do with those stocks? Well, every stock has a thing called a ticker symbol, and that's usually a 2, 3, or 4 letter symbol that represents a company. You don't have to memorize them, but you know, we provide those for you. But what you can do is you can type the ticker symbol into your charting software, and a lot of times we use Telechart. And when you get involved with us, we'll show you how to get all that set up. We even have a thing called the David Mitchell settings. If you're an insider, you get access to those, where it will set your charting software up just like mine works and like I've used it for 30 years. And it saves you weeks and weeks and weeks of time in setting those things up. So all that's available to you. But let's assume you've gone out there and you already have all that set up. And let's talk about technical analysis a little bit. So your charting software is what enables you to do this. And so technical analysis is all about charting, and you're looking at the price of the stock and the volume of shares purchased and sold in a given day. You're looking at that price and volume action charted over time. And what that does is it gives you the potential to see good buy and sell points as these stocks make little cycles, or they make trends, or they make patterns that are recognizable. And we teach you all of these patterns and trends and how to know what cycle the stock is in our educational system. So it's not difficult. In fact, it's a lot of fun. In fact, we do everything as a family. If you have children who are, 10 years old or something like that, a little older on up, they will love this, and they're probably going to be better at the charting than you are, because it's all about art, right? So they can just visualize and see these patterns and help you spot them. So anyway, when we're charting, it's going to show the price action. Now, in the old days, they would use the closing price at the end of each day, and they would plot that on a chart over time. And still today, most people that are good at charting consider the closing price to be the most important price of the day, because a lot of times the big boys jump in and trade the last 20 minutes of the day after they've watched the amateurs all day to see what they're doing. So we look at that last price, but that's not all we do. There's other ways we can chart. We can see several prices during the day of a particular stock, and it helps our mind to be able to start to feel the emotion of that particular stock in the market. That means the people who are buying and selling that stock. And so another thing that technical analysis does is it shows the emotion. Now, here's something you may not know. The stock market is predominantly emotional, not intellectual. The bond market is a completely different matter. It's mostly intellectual. But the stock market, you have to always remember it's predominantly emotional. And that's why the third leg of the trading table, market tone, is going to be so important when we get to that, because it's all about how the news affects the particular play that you're in. But charting helps you see the emotions of a particular stock. And it's really amazing how you can get really good at charting, and you can get good at just spotting these things very, very quickly, which makes trading really, really possible for people who already have careers and they don't want to quit their career. For example, me, I'm in the ministry. I'm not going to quit that. I can do my homework at night and on weekends. It takes about 4 minutes to place a trade, when the week starts, and I've already got my homework done. I've looked at the charts. I know which stocks I want. I pull them out of the basket that you get from insiders. I use the same basket of stocks that we provide you guys, and my family uses those. In fact, I build them for my family, and we just share them with you is really how that works. And then you pull them out of there and you stick them into the charting software, one ticker at a time, and you look for these patterns and find the ones that are pretty. That's kind of how you do it. So you can do all that on weekends or at night on your own spare time. It does not interfere with your career. And then maybe 10% of our people, about right in that ballpark, actually fired the boss and do this full time. So they have even more time to look at the charts. I kind of call charting, it's kind of like an adult Easter egg hunt. I mean, there's just every day there are opportunities in the stock market, either to make money when the stock's moving up or to potentially make money when the stock's moving down. You have potential every day, so it's fun to wake up and take a look at what's happening, and you use the charting to see these things. All right, so it's going to show you the price and volume action, and it's going to show you the emotion of that particular stock. In other words, the people who are trading in that stock, because they're human beings and they have emotions, and that is actually pictured. The composite of all of their emotions is summed up in the chart of that particular stock. Another thing that the technical analysis does with regard to charting is it's going to show you how to read the supply and demand. Now, that's a matter of economics, and so God put supply and demand principle out in the universe. I have found that every great principle that we find in business school is alluded to in the Bible. In fact, the Bible is the oldest book on the planet that has economic and financial principles. But the law of risk-return trade-off, the number one law of business, is found in the Scripture. It's where we got the idea from. God showed it to us. And then the idea of supply and demand in economics is in the Scripture. God showed that to us. He showed us how it works in the Scripture. That's where we got it. Now, people don't footnote the Bible anymore in their textbooks, but they should. But anyway, you take supply and demand. Do you realize that if you just understood how supply and demand works, it would make you a better stock trader than your neighbor who doesn't understand it? And I'll just give you an example. If you just think about stocks like any product, for example, let's say you owned a tennis shoe factory and you're the only tennis shoe factory and you got some great athlete to sponsor your tennis shoe. So there's huge demand for your tennis shoe. And your factory can only make so many hundreds of those per day, right? So there's a limited supply on the market. So now when you have limited supply, but you have large demand, what does that do to the price? Almost all of you listening intuitively know it makes the price go up. They're able to charge more for the tennis shoes because there's huge demand, but there's not a lot of supply. Now, what if your factory, let's say you had some competition and someone else comes in and builds a tennis shoe factory. Now there's twice as much supply out there and just about the same demand. What's going to happen to the price? You're going to have to lower your price a little bit to sell them, aren't you? Because there's twice as much supply and the demand is about the same, right? So the price has to go down to sell them. Now, what happens though if there are now three of these, and so now you've got all this activity happening, but all of a sudden two of them burn down, and now the supply is greatly lower than the day before, but the demand is the same. What's going to happen? Well, you can raise the price. People will pay more to get the product. Well, the same thing is true of stocks. So picture this. Let's take one particular company. Maybe, and remember, all these are academic examples. Doesn't mean these are good companies to trade in today on this particular day, but let's just take Amazon, for example. All right, so let's say you got 3 or 4 big boys trading in Amazon. And by that, I mean people that are wielding billions of dollars that they're trading on behalf of either a company, a mutual fund, or something like Baylor University's excess money. You have someone in charge of trading that money, investing that money. These kinds of people who can buy millions of shares in a given day or sell a million shares in a given day, those are the big boys. Now, let's say you had 3 or 4 of those, and all of them decide that they think Amazon has gone up quite a bit lately and they want to take profits. So all 3 of these big boys, or 4 of them, begin to sell millions of dollars worth of shares, which comes out to be millions of shares all at one time. Well, what happened? They just put a whole lot more supply out there, but demand hasn't changed overnight very much. So now you got way more supply and about the same demand. So what's the market maker going to have to do? He's going to have to lower the price of that stock to sell it. And he wants to sell it because he makes his money selling the shares, right? He makes his commission that way. So he begins to lower the price and the stock goes down. Now, what happens after 3 or 4 weeks and it hits a certain moving average that these big boys are watching, and they like to make it bounce up off there, so they all begin to buy back in to their positions in Amazon. So now all of a sudden they're taking millions of shares of that stock off the market where you and I cannot buy it because they bought it. And so there's way less supply and demand is about the same. What's the market maker going to be able to do? Well, he can raise the price and keep raising it all day because people have to pay it because there's not enough stock available and they want it. You see? So just this simple law out there of supply and demand, if you understand that that applies to the stock market just like it does tennis shoes, it'll make you a better trader. So one of the things that technical analysis does, it lets you see that supply and demand changing. And you predominantly look at that in what we call the volume bars. So if you could picture a chart, and it's got a line where we've connected all the closing prices for the last 3 weeks of this particular stock over time. And let's say it's a daily chart. So going across the x-axis, across the bottom are days, 1 day at a time. And that stock is trending upwards, kind of bouncing up and down every 2 weeks in a general up slope or an uptrend. Well, underneath, on that same chart, underneath that stock action, where we draw the price action, are these little things called volume bars. And they're just little bars that go vertically up and down for every day. And so what that does is it visually shows you the volume of trade on that particular stock on that particular day. That's both shares bought and sold, okay? And you don't really know if they're bought or sold, but it's both. It's all, obviously it's both, because if you're going to sell, you have to have a buyer, right? So it's just showing the volume of trade that day for that stock. Now, those volume bars are interesting to look at. And here's just an example of how we can kind of know when the big boys are jumping into a stock. We can read the emotion of that stock, that it's hot right now and people want it. And we can also look at supply and demand, because here's what we can do. Let's say that stock pulls back to a low that's kind of a low price over the past 3 or 4 weeks. And as soon as it hits that point, it bounces up that particular day. And at the end of the day, when we get home from work, we look and the volume bar is considerably higher than the volume bar for the day before and maybe even for the last 4 or 5 days. It's higher than the average of those volume bars for the last 4 or 5 days. That higher volume shows that big boys actually bought stock, because there are not, the retail investors, people that are not big boys, they can't wield a big enough stick. They don't buy millions of shares. They buy a few shares, maybe 3 or 4 shares or 100 shares. And not enough of them get into the same stock at the same time to move that very much. But when you have 3 or 4 of these big boys jump in, even 2 or 3 of them jump in, it will move the volume bar and you can see it. You can see they got in. And so what did they do? They pulled a lot of that stock off the market and they lowered the supply. The demand is still about the same, so the price is moving up. Well, what we want you to do is to learn to jump into that stock right after you see that happen. When you see that stock action bounce up off of a low, for example, on the same day the volume bar was higher than the days before where the big boys are jumping in, now's the time to get in, you see? And then there are ways to look at these past charts, the past action of a chart, and you can look at where the bottoms hit the lows, and you can draw a line that connects those. And then you can do what we call pop in a line above that connects the highs where it gets up to a certain high and then turns and goes back down. We call those support and resistance lines, and they're supposed to be parallel to each other. And if it's a trending stock, an uptrending stock, they'll be slanted up. The slope will be moving higher, and they'll be parallel to each other. And the bottom line would be predominantly where the lows hit and bounce up. And the top line will be predominantly where the tops or the highs hit and tend to bounce down. So it creates a channel in which the stock moves up and down. And a lot of these oscillations average about 2 weeks. It'll take it about 2 weeks to go from the bottom line to support line and move up and hit the resistance line. And then after 2 weeks, it'll bounce down. It may take a week for it to go all the way back down to support, turn around and bounce back up. So we're going to show you how to read these and how to create these charts and create your support and resistance lines. And as soon as the stock moves down and hits that support line and bounces up a little and the volume is higher than the day before or several days before, and you know the big boys jumped in, then you can jump in. And then as that stock moves up and gets close to the resistance line, which is where they tend to sell and make it bounce back down, right before it gets there, you sell. So you sell before it gets to that line. And that means you're getting out before the big boys get out. And that's a big secret that we teach. Our family's done it for years. It gives you the potential to be a really good trader. So you've already picked a stock that's fundamentally sound because you grabbed it out of the stock basket that TRADEway provided to you as an insider. You got over 100 stocks over $30, all the way up to $300, $400 per share you can choose from. They all have good fundamentals. You pick a ticker symbol, start putting them into the software. You look at the chart to see where you are. And if you see that it is making these nice little patterns where it's bouncing up off support, it hits resistance, bounce down. You let it come all the way down to support, hit it, bounce up on higher volume, and you jump in and you jump out before it gets to resistance. See, now that's not rocket science. That's just a skill set that we teach you. So you can go out to TRADEway.com and sign up for the Insider Plus program. It's going to give you great help with fundamental analysis so you don't have to do all that math. We do that for you. Give you this great basket of stocks. It's going to help you with technical analysis to know when the great buy points are. It's going to help you with market tone through these market alerts that you'll get every day. And it helps you know, is the news moving in the right direction for the play that I'm doing? Industry rankings, coaching, ongoing education. It's such a great program. Now, there's another thing you can look at out there on TRADEway.com that's really awesome. It's called Step 1 Start Your Journey. And it's actually a live virtual event, a 2-day event. And it's just amazing. So you can take it from the comfort of your own home. We start at the ground floor and we go all the way through. And after 2 days, you're actually going to have strategies that give you the potential to start changing your family's financial outlook. It's really amazing. Check that out. Now, think about this. What we want you to do is do your homework the night before or on the weekend where you know where the support and resistance lines are. You know you're at a good buy point because it just bounced up off support on higher volume. You saw that the night before, and you plan out the entire trade. So you already know your entry point and you know your exit point before you risk any money into that trade. And then you just need to have the discipline to let that be your plan and go with it. Like when it gets up close to that resistance line, you're going to sell it. You're not going to say, well, maybe I'll sell it. You're going to sell it. So that's how you get to be really better and better at trading when you keep those kinds of rules. So I know it's a little bit hard to visualize this through audio, but remember, when you go out to TRADEway.com, you can sign up for Step 1 Start Your Journey, and it's a 2-day full-blown virtual event. You can take it from the comfort of your home, and you can now see the charting. You can see all the different things that we've been talking about. And you can even sign up for the Insider Plus program, and you get help with fundamental analysis, technical analysis, market tone, so you know if the news is moving in the right direction to help your play, and all these wonderful things. It's like an ongoing education also. And remember, we do everything one step at a time so that you learn this as you go, and you start from ground zero, and all of a sudden you've got strategies that have the potential to change your family's finances. So let's close with this thought. Can you tell the future? No, you can't. But God put this wonderful thing in the universe called probability math. And when you get all three legs on the trading table, fundamental analysis, technical analysis, and market tone, it helps the probability math be on your side. And so now you've got the potential to make some great trades. And that's what it's all about with the TRADEway program. And remember, what happens when the trade doesn't go the right way? You limit your losses. You lose small and you win big. And then the other thing is you want to figure out what the big boys are doing. And that's all part of technical analysis. You look at the volume of trade and you know if the big boys are in or not, and you just get in with them and then you get out a little bit before they get out. Don't you think that would give your family the potential to change their finances? Just go to TRADEway.com and sign up with the Insider Plus program, or check out our next Step 1 Start Your Journey 2-day virtual event. Hey, thanks for joining us today. And listen, rate and review the program if you loved it. And that way like-minded people can find us, and we'll see you next time.